Bitcoin is hitting new all-time highs again, and this bump I want to discuss some altcoin charts here, because first of all,
straight into it, here's how you can stake on Bakery Swap, all right?
Lost in a sea of red, holding on to those altcoins that just won't bounce back. Feeling stuck, paralyzed, wondering should I sell or hold? Well, you're not alone, and today I'm about to show you how to turn that nightmare into a strategic advantage. If your portfolio looks like a crime scene with coins bleeding red and losses piling up, stick around. We're diving deep into proven frameworks and mindset shifts that will help you manage unprofitable positions like a pro. No more guesswork, no more emotional baggage, just clear, decisive action to stop holding bags to zero. Ready to take control? Let's get into it. The pain of holding a losing coin. Let's be honest, holding onto a coin that's plummeting in value is one of the most painful experiences in trading. You bought that coin with dreams of moonshots, expecting a 10x or even 100x return. But now it's down 60%, 80% or more. The chart looks dead. The community is silent. The hype has vanished. Yet still, you cling to it, hoping for a miracle. Why? Because admitting you were wrong feels like admitting failure. Locking in a loss stings. It's an emotional blow to your ego. So, instead of cutting your losses, you tell yourself, maybe it'll come back, or it's just a temporary dip. This mindset is rooted in what psychologists call the sunk cost fallacy, the tendency to keep investing in a losing position because you've already invested so much. But here's the brutal truth. If your original thesis about the coin is dead, then your money is already gone. The loss occurred the moment your reasoning was invalidated. The only real question now is how much more time and opportunity are you willing to throw away on a dead asset? Why holding until break-even is a trap? Many traders, especially those new to the market, fall into a common psychological trap. They hope to break even on a losing position. They convince themselves that if they just hold on a little longer, the coin or asset will bounce back and recoup their losses. This mindset is often rooted in hope, fear of realizing a loss, or ego preservation. However, this approach is fundamentally flawed and can be detrimental to your trading success. Holding onto a position simply because you want to recover your losses is not a solid strategy. It's an emotional reaction. It's a way to manage your ego rather than manage your risk. It's easier to tell yourself it will come back, rather than accept the reality that the trade was wrong. But the market doesn't care about your hopes or feelings. It responds solely to supply and demand, fundamentals, and technical signals. If a coin has dropped 80% and nothing fundamental has changed, the likelihood of a quick recovery diminishes drastically. Continuously holding onto a dead coin in the hope of break-even is essentially managing ego, not your portfolio. Successful traders understand that accepting losses is part of the game. They know that every moment spent holding onto a losing position is a moment not spent on more promising opportunities. Instead of clinging to hope, they practice discipline, cutting losses early and reallocating capital to assets with better prospects. This approach maximizes overall profitability and reduces emotional stress, allowing for clearer decision-making and better risk management. The power of a simple question. To avoid falling into the trap of holding too long, traders should adopt a more strategic mindset centered around asking themselves the right questions. Instead of asking, will this coin go back up? Which is often driven by hope or fear, ask yourself a more powerful, rational question. Is this coin the best possible use of my capital right now? This question shifts your focus from emotional attachment to strategic thinking. It forces you to evaluate whether holding the asset aligns with your current market outlook, your portfolio goals, and your risk appetite. If the answer is a confident yes, then holding may be justified. But if the answer is anything less, perhaps uncertainty, doubt, or a feeling that better opportunities exist elsewhere, it's time to reconsider your position. This approach applies not only to coins with significant losses, but also to assets that are merely stagnating or underperforming. Sometimes, a coin that has gained 1.5x or 2x may no longer be the most efficient use of your capital if other opportunities are outperforming. Recognizing when to reallocate is key to building a resilient, profitable portfolio. The trader's secret. One of the most effective strategies employed by professional investors is portfolio rebalancing. It's a disciplined process of adjusting your holdings based on current market conditions, performance, and high-conviction ideas. Rebalancing ensures that your portfolio remains aligned with your strategic goals and risk tolerance. In traditional stock markets, rebalancing typically occurs 2 to 4 times a year. But in volatile markets like crypto, where prices can change dramatically within days or even hours, savvy traders often rebalance at least 4 to 6 times annually, or even more frequently when necessary. Why? Because if you don't, you risk holding on to assets that no longer serve your strategy, or worse, that are dead investments. Over time, some assets will outperform, while others underperform or become irrelevant. Clinging to dead coins or stagnant assets prevents you from realizing gains elsewhere and wastes mental energy on investments that no longer align with your goals. Regular rebalancing helps you lock in profits, cut losses, and keep your capital working efficiently for you. The graveyard of dead coins. History is ruthless to coins that fail to rebound. Many once promising altcoins now lie in digital graveyards, never to see their all-time highs again. Icon, ICX. In 2018, it soared to $10. Today, around 10 cents, a 99% drop. It's a ghost of its former self. Nano, peaked at over $37, but now hovers under $1, down over 97%. Zilliqa, once a hot project, down over 96% from its peak, never reclaimed its high. These stories are not anomalies. The crypto market is littered with dead projects. Holding on to these zombies is an opportunity cost. Your capital and mental energy are better spent elsewhere. The myth of this coin will come back. Some traders cling to hope, citing XRP as an example of a coin that survived multiple cycles. While that's true, XRP is an exception, not the rule. The vast majority of altcoins don't come back. They fade into obscurity, leaving holders with worthless bags. When to hold and when to cut. Not every red flag means you should sell. There are strategic reasons to hold on to a position. Core thesis intact. If the fundamental reasons for buying the coin remain valid and your losses are due to broad market declines, it might be worth holding. Tax strategy. In some jurisdictions, selling at a loss can be a smart tax move, offsetting gains elsewhere. Always consult a tax professional before making such decisions. But in most cases, if the original thesis has crumbled, so should your position. The framework for smarter decisions. The key to managing losing positions is discipline, and that starts with a simple, repeatable system. I recommend the 3-question portfolio audit. 1. Why did I buy this coin? What was the original thesis? Was it based on solid fundamentals, hype, or a short-term trade? 2. Has anything fundamentally changed? Did the project's team quit? Did the narrative shift? Did competitors outperform them? Or is the reason for buying still intact? 3. If I had 100% cash today, would I buy this coin again at its current price? Be brutally honest. If the answer is no, then why are you still holding? If you can't answer yes to that third question, then it's time to cut and reallocate your capital to higher conviction opportunities. The power of rebalancing and mental clarity. Adopting this system transforms your approach from emotional reaction to strategic action. It streamlines decision-making, reduces stress, and ensures your portfolio remains aligned with your goals. Remember, professional traders don't chase every opportunity. They cherry-pick the best. They don't hold dead weight just because they're emotionally attached. Trade smarter, not harder. The crypto market rewards discipline and strategic thinking. It's tempting to hold on to that favorite altcoin, hoping for a comeback. But most dead coins don't come back. They become part of a graveyard littered with lessons. Stop managing your ego and start managing your portfolio. Ask better questions. Cut the dead weight. Reclaim your capital and mental energy. Rebalance regularly. And most importantly, think like a professional. Remember, the market doesn't care about your entry price or your hopes. It cares about your ability to adapt and make informed decisions. So, trade smart, reallocate wisely, and keep moving forward. You've got this. Now go reclaim your capital and your peace of mind.